Hi everyone, this is Rob Roy of Elliott Options, and welcome to this trade review of our recently closed trade ID number 709. This was on OKTA, yet another winning trade in our AI-based time strategy. As you can see, this one was a put calendar spread. Our entry alert was sent out on June 2nd, and when you take a look at this, you can see that the stock had a big drop on earnings. A couple things happen when you have a big drop, which occurs often after earnings. You get a spike in the IV, particularly on the put side because the stock's had a drop, and then there's a likelihood that the stock stays in a trading range, and our AI enhances that by giving the stock a score of the likelihood that the stock's going to stay in a 1 standard deviation range following that drop. On this example, it was one of the higher scores that we've had in the history of our AI-based time strategies, so the setup was really nice. You can see there's clearly support right there at 70, so hence we sent out the 70 put calendar spread, buying the July 70 strike put and selling the June 70 strike put. Well, now we get to June expiration. So the short put is going to expire, and at expiration you can see the stock has moved to the upside. We're going to close above 75, which means that the short put will expire worthless, but the overall trade is at a little bit of a loss. A couple things to consider here. Now, we could just take the loss, but the stock hit its 50-day moving average on the high and came back down. We closed right at the 10-day moving average. So if we go up and look at our mark-to-market graph, you can see that, all right, we could have closed it at June expiration, letting that June put expire worthless, and then selling the long July put to close at a 20% loss. No harm, no foul, move on to the next trade. However, remembering that this one had a very high score from our AI and the fact that it had hit the 50-day moving average, we decided let's go ahead and give that long put a couple extra days and see if the stock doesn't move back down. And exactly as the AI forecasted, the stock did come right back down to 70 in 2 days. So Friday of June expiration, move into the holiday weekend, Tuesday and Wednesday, boom, boom, right back down exactly to that 70 strike, allowing us to close this position by holding that long put just a couple extra days at nearly an 86% gain, or $450. So it shows you the flexibility of putting on these calendar spreads where you don't necessarily have to close it at expiration. Every trade is taken on its own value, but with all things considered, the decision was made, it turned out to be the right one, and we generated a nice gain. Hope you found that informative. Look forward to talking again soon. Take care, everybody.
If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.